you want to see that prices are moving within a range. And what tends to happen when prices are moving in a range is that they revert to the mean. Okay, everybody, if you guys aren't familiar with that concept, reversion to the mean, I definitely recommend reading up on that. You can. It's so much. There's so much information for free online that you guys can really get caught up quickly with some of the concepts that I'm going to be discussing. I've been trading for over 10 years, specifically in futures, and I've covered so many different systems throughout my trading career. I've worked for different firms that taught different methodologies, everything from Gann analysis to Fibonacci to market profile. So I've covered various areas, and I've tried to kind of not master all of them, but I've tried to be adept at understanding all of them so that when I do see different indicators and different products that come out over time as trading evolves, I'm able to make sense of it relatively easily. And so these indicators here that CatchTheTurn is offering do a good job of simplifying the trading process for new traders, and it also allows more experienced traders to add it to their methodology or their own rules, because a lot of traders that have been doing this for a while have their own setups. They have their own excuse me, they have their own set of indicators that they've been using for a long time if they've been successful, and maybe they're just looking to kind of look for another tool that they can add to maybe confirm a setup or give them a little more confidence in taking one of their own signals. So that's essentially, I know I kind of veered off a little bit, but I just wanted to kind of go over that with you guys briefly. So this indicator does recalculate, okay? It does. That's what it's supposed to do, but it's also giving you an indication when it recalculates of where prices are gravitating. And so as we can see, this started to curve upward, and this will curve upward. It will go straight. It can also curve downward. And what that does mainly is just gives you an idea of I don't want to say the trend, but the bias, the directional bias, because we're looking at trend a little differently. For me, trend is higher highs and higher lows for an uptrend, like this. Higher highs and higher lows, okay? And then when those channels are violated, I have to reevaluate my position. Are we still long here? So in this case, it had a fake out to the downside, and it probably caught quite a few people short, and as you can see, it quickly reversed back up into that channel and continued its path higher. The ocean indicator did a very nice job of following and adjusting to that price action, and so that's really all you want to use it for, is just to kind of give you a bias. You're not going to rely on it for all your entries specifically. We have other indicators that will help you find those entries, so this is just one tool that we have. The next one is our Cobra indicator right here, which you can see. It's this red line and this yellow line. And what this does is it's able to remain on either side of price to show you where that bias is. So if I said a downtrend is lower highs and lower lows, which we do see here, this Cobra indicator actually allows you to use that as a dynamic resistance level from which you can short and from which you can take entries. And this price, when this is happening here, will be up towards the upper range of price that we look at with the ocean indicator. So you're starting to put together a combination of tools, and these are uncorrelated. These two do not calculate the same. So you're not using, like some people have their charts loaded up with 2 or 3 momentum indicators or 2 or 3 oscillators. To me, that's rather useless. All you need is one momentum indicator, one oscillator, and then price action and volume. Those are probably the most important things you can look at, is just price and volume. But if you're going to add these indicators to help you confirm the direction, then try to be efficient with it. Don't add 3 or 4. Don't clutter up your charts with too many of the same thing. So this indicator right here, let me fix the way it looks. Excuse me. Okay, so here we've established that prices are moving lower, and we have a confirmation, we have an indicator that we call the CTT Market Force Indicator, and it does a good job of showing momentum. And what I did was we have a couple indicators. This is the one that we sent out to those of you that attended our NinjaTrader webinar. It is a free indicator, but it's very, very useful, and it does have some improvements over the standard MACD. So that's why we send it out, and I use it in my own trading here. We have it, and it does a nice job of coloring the bars for me. It also gives you a signal, and most MACD indicators do not do that. At least the out-of-the-box ones do, unless you get something customized. So it also shows you the trend on the signal line. So it does a nice job of confirming your possible entry when this bar was forming and prices started breaking lower. Well, you had a couple confirming indicators here that would have given you more confidence for the trade. So as you can see here, we hit a high about 131.45, and that was where the arrow appeared. Our market force did not confirm for another hour or so, but this down move was established, and so we knew it was going to move. And let's just see, just so we're on the same page here, let's get an idea of how far we moved just on this first swing down. Okay, so that was about 70 ticks. So a really nice move on an hourly basis. And that, keep in mind, this is back on the 25th, so I know we do have live data over here, but I'm just trying to show you guys a little bit of historical so you can see how these bars form and stuff. Let's move along here on this upswing. The other thing you can look at is we have a CTT high and low averages indicator, and this is a much larger perspective, and it kind of just gives you the overall direction of pricing. Okay, not so much trend, but prices, because prices will can move and correct in an uptrend, move downward. So I don't want to call it a trend indicator. If anything, the MACD is plenty for a trend indicator, and looking at price action, the bars itself, the candles. Okay, so that is a quick summary of all our indicators and just how you would kind of start to put them together. I don't expect you guys to catch all this. Obviously, this is just a brief presentation where I'm kind of showing you guys what we use to trade and how we do it. Let me answer a couple of the questions here. Okay, question, where was the entry? So if this was going to be a potential setup trade, this is an hourly candle, so if you're trading intraday, you're probably not going to use a 60-minute chart. But if you're swing trading, or you're going to hold a position for several days, then your entry would have been at the close of the 60-minute candle, always. Now, there's two ways to do this, because some people are trend traders and some people are reversal traders. So as price closed down here, this channel did not look like this. Keep in mind, when these bars were forming, the channel was over here, right? The channel was shifted over because it was recalculating. So more than likely, price was at the upper range of the channel. I can't say exactly that it was at this extreme, but it was at the upper range. And so once you have confirmed that prices are in fact at the upper range of of the channel, and then Cobra turns red, that's your first confirmation to start looking for a short setup. Okay. And now we have our MACD signal coming in. We have market force confirming on the second hour. So you have a choice here. You can use an aggressive entry and get in at the close of this candle. And the reason some people will take these aggressive entries is why? Because they don't normally, or they won't get a pullback in order to enter the trade and get back in, and they'll just miss that move. Okay, so an aggressive trader would enter at the close of the 60-minute or the open of the next hour, regardless of where it is. So in this case, price closed here. Let me zoom in here so you guys can see this a little more clearly. So this candle closed. Your order would be placed here. You can either use a market or limit order, and you would have had to take some heat on this, obviously, because price pulled back to 31.19. Now, if you're swing trading, that's a very small stop. You're not stressing out over 20 ticks. However, if you're intraday trading, that's why you wouldn't use a 60-minute, because 20 tick stop on a 6E intraday trade is a bit much for me. So, I'm sorry. Question from Joe. I didn't get the indicator from Ninja. how can I get it? Hey, Joe, I'll take care of you at the end. Just talk to me. I'll post the email address, and we'll take care of you so that you can request it. So anyways, let me get back to this real quick. So price in this case did pull back a little bit. And as you can see, if you waited for a pullback on price, one way to do this is you guys can add other tools. Like, we don't claim to have every single, the best tool of everything. But the key to trading is finding a suite that you guys can put together and just be really efficient with your analysis. So I do use fibs, like most traders do. I think I found most traders that I've met that are successful, like Fibonacci. I am one of those. And so what you can do is look for, this is just a retracement here. And what we had is a pullback. Actually, on this second candle, if you waited to get in, let's say you saw this bar close, you confirmed short, your indicator's just starting to go short on this second candle here, and the MACD here had clearly already crossed, actually back on this yellow candle, the signal line had already started turning red and moving below the zero line. Okay. We also had a convergence here of the high and low averages, the red and the blue line, indicating that the buyers were waning. Basically, the buyers were drying up. So these two lines converged, indicating that there was a loss of buying pressure. This was the buying pressure here on these up move candles. And then by this time, that buying had dried up, and these sellers had kind of not overtaken, but as you can see, they kind of caught up to the buyers and said, no, we're going to start taking this thing lower. So I'm paying attention to price, volume. Those are the most important things to me. I'm using these indicators to kind of give me kind of like a radar screen view. If you guys can picture a jet, fighter jet pilot in a cockpit looking at through his helmet, he can see all these different things. That's how I'm using this, and that's how you need to approach trading, very methodically. I got a pullback on this candle here. Came up to the 50%. You could have either been aggressive, got in anywhere near that area, 31.19. Obviously, if you had it somewhere in between the 50 and 618, you would have probably not been filled. Doesn't look like price closed above that 50% retracement. So that would be a pullback entry. That will always be the more conservative entry to get in on a pullback. And you can say, well, you're going to do it. We're not always going to get a 50% retracement on these. Sometimes price will come all the way back up to the Cobra. So it's going to come down to what you're comfortable with, your risk tolerance. If you have a large account, this is nothing for you, right? You can hold this thing, 50 ticks if it goes against you. But for a smaller account trader, someone who's trading maybe a few $1,000s or is only trading 1 or 2 contracts, you can't afford to use 30, 40, 50 tick stop loss. It's just going to kill you in the long run. So this is just an example on the 60 minute. So this would apply mainly to those swing traders that are trading most of the time. It's going to be a larger account because of the margin requirements and that kind of thing. So I won't get too much more into that, but I just wanted to show you how we would look for a setup, how we would get in. And in this case, if you got in on that entry, price did move in your favor. And let me get rid of that Fibonacci because it is a little, oops, I think I removed the wrong thing. Sorry about that, guys. Give me 1 second here. Got rid of my trend line instead. Okay, so all right. Okay, so in any case, you see where we got in, and price did move in your favor. I just wanted to give you guys a brief idea of if you got in on the pullback, potentially, let me move this. Now, it says 48 ticks, but clearly that's at the very top of this, at the high of this candle, at the wick. So let's say you got in somewhere down here, okay, even down towards the body. Okay, so at the very minimum, you're looking at about 30, 33 ticks. The way I trade, first of all, I wouldn't be taking my signal off the 60 minute, but if the 60 minute's going in my direction, in the direction of the trend, I will be looking for shorts only, okay? And so that will, essentially what you'll do is you'll take profit on the way down. So if you're trading multiple contracts, we'd be scaling out, +5, +10, and then you can leave one on as a runner to see if you get those 30 ticks, and you'll just trail your stop along with it. And we have an indicator specifically for that, which I did show, which was the CTT stops indicator, and it looks like this. I have to adjust the settings on this. They're a little wide. So your stop on the short would have moved down to about here. As you can see, our Cobra indicator was a little more responsive. So you have two ways to go about it. You can set your stops on the way down as price moves your direction. You can put them at above each swing high on each candle. Or you can wait for price to come and take you out when it violates the Cobra line. Okay? So those are just a couple examples. This is a 6E market. Let me get to a couple questions here while we're here. Okay. Open of the bar or the close? I think I answered that. Patrick, feel free to, if that wasn't helpful or if you're still unclear, I'll get to that again on the next instrument. I'm going to switch markets now so I can show some other examples because, to be honest, guys, the 6E today has not been very good to trade. It's just been very, very flat for larger swings. Now, intraday, it has been a little better. But really, I think, in my opinion, I think the euro is kind of just ranging right now until the NFP data comes out later this week. And also keep in mind we have a holiday coming up here in the United States. For those of you that are in other countries, 4th of July is a major holiday for us. And so don't expect the markets to do too much. But let me move on now to the S&P 500. And then those of you that are asking about the indicator or that you received the indicator, there should be two files that you received with the indicator. One was a installation document, a Word document that has an explanation of the improvements over the standard MACD, and also the basic instructions on how to import it into NinjaTrader and install it. And if you guys are having trouble, I can help you guys out with that after the webinar. So, all right. Okay, guys, so here we have the S&P 500. So let me go get a little more in depth of how we use these multi-time frames because I didn't really touch on these 1 minute, the 5 minute. I also use tick charts, and you can use it on range charts as well, and they look really good on range bar charts. So I don't have an example right now of that. I just wanted to give you guys a basic template that we look at. This is how we look at things. So the 60-minute is, let me just clear this off real quick. Give me 1 second. Okay, here we go. All right, guys, let's see here. So the futures this morning, as we can see, oh, you know what? I need to change my session data because I have it set to 24/7, and that is not correct. So I apologize. I use these charts for Forex presentations and everything, so I have to go in and actually go back and forth. At some point, I will probably create alternate workspaces, but for now, it's just going to be real quick. Okay, for the smaller ones, it doesn't matter so much. But okay, guys, so here are the sessions for the futures. As you can see here, we begin at 9:30 Eastern, and I'm going to make this a little bigger just so you guys can see it. Our trend on the 60-minute was higher. It was to the upside. This was given to us pretty early this morning. As soon as this Cobra indicator turned yellow, I started looking for buyers to come in. And that's an advantage we have with this indicator that a lot of other lagging indicators and awesome, things like that, they don't tell you. You don't know because you're not really analyzing price on most of those indicators. They are using information that has already happened. The Cobra's formula is a little bit different. It does a nice job of kind of catching an early reversal, if you will. In this case, it looks like they were going to take it down. People were talking about possible large, big sell-off. I was reading a lot of news articles saying that the sell-off is coming, the crash is coming, and that's very possible. The crash may be coming at some point, but until price tells me differently, I'm just gonna respect the charts. As some of you may have heard that the price is never wrong. So, and it sounds very cliche, but it's so true because so many times we get caught up with analysts' opinions. These guys are paid a lot of money to come up with something to say, and most of the time they're wrong. As we've probably seen just by watching Bloomberg and CNBC, these guys are wrong far more often than they're right, and it makes it very frustrating for a trader. So in that respect, I recommend, turn off everything. If you guys do like to watch CNBC and those things, that's fine. But when you're focused on looking for trades, forget that stuff. Just tune it out. Focus on your charts, price and volume. You're getting real-time information coming through. Let this tell you what to do. Don't worry about what some guy at Goldman Sachs is saying. Those guys have other interests, larger interests, and that don't coincide with what we're trying to accomplish as traders. So I recommend ignoring those guys and just, this will tell you all you need to know. And sure enough, we opened around 16. I think we're at 1605, 1606 if I recall, and we moved higher up to, right now we're sitting at 1617. So that's anybody who caught even a portion of that move is doing very well. On something like the S&P contract, you're not looking for much. I think most people would be very happy with 2 to 4 points a day trading the S&P. Each tick is $12.50. Most of you are probably trading, multiple contracts, anywhere from 2 to 20. So you guys you're not swinging for the fences on these. You're not trying to, kill the market every day. You're just trying to take a little bit of this move here. And so the Cobra indicator gave us a nice early indication of where prices were likely to go. As you can see on the 60-minute, our market force indicator was decreasing, but it was not. Let me make this a little bigger so it's easier to read. We did have a little bit of, I want to say, decrease in negative momentum as the market force indicator approached the zero line. Now our MACD, our CTT MACD indicator, gave us an even earlier signal as this moved higher, right? And even down here you can see, so this green line started right at the beginning of the session, probably pre-market. I got to double check the settings. But price action confirmed the move to the upside, so I would have been looking for a long entry. And let's move back here now. Let's go on the 5-minute chart. Let's get back. Okay, this is if you're trading, those of you that like to trade the overnight session, you can use our smaller time frames to scalp the futures contracts overnight. It does a really nice job. There are occasions where it will get a little choppy, but those of you who trade overnight already know this. You're very familiar with the choppiness of the market, very light volume, so you got to be careful. Any indicator will lose its effectiveness when volume dries up. Okay, I don't care what anybody tells you. If they're telling you it works in every single condition, they're lying to you. And I would say just run for the exits. These aren't perfect. There's a lot of times where they're not working, and you have to use your abilities to analyze what price is doing to confirm if you're going to take the signal or not. But more times than not, these will keep you on the right side of a trade. The idea here is to keep you in a trade when it's going in your direction. Don't take yourself out. Let price come and take you out of the trade. And so right here, this is overnight, which I normally don't trade, but there was 2 signals here to go long. The 60-minute had already been forming its upward bias for the day. So if you do trade overnight, if you do like trading the light volume, there was a couple opportunities for you to catch some points on the S&P contract. And then let's move forward to the East Coast, the New York Open. Right off the bat, we had buyers coming in. We already established, guys, that we were looking for upward bias today, right? We established that early in the morning. As you come in looking for your setups, we did have a confirmation here to go long. Let me go ahead and mark my charts up. This is a 5-minute chart, by the way. So here was our first indicator, that indication that we wanted to go long. Our MACD was already confirming, gave us an early signal there, and then finally we saw some energy coming in. So it's one of those things where everything kind of lined up. Okay, you don't always get that, but in this case this morning, it was I'm going to say it's very easy to make money. You could have had your eyes closed, I think, with this one, and just been long, and you would have been okay. But this does a nice job of keeping you in, getting you in early on that move. As you can see here, the signal to get in was in the consolidation. So I got a question here. There's a couple questions. Let me go back. Okay, can this setup be applied to the M6E or need any tweaking? Canoe, I don't know. I don't M6E, is that a micro? Is that like a mini version of the 6E? If the volume is equivalent, let's put it this way, you can trade the same settings on the Euro USD Forex spot pair. Okay, so if the M6E is anything like that, or if there's enough volume, then yes, absolutely, you don't need to tweak anything. You can use the standard settings. However, here at the company, we don't sell you the indicators or lease you the indicators and say good luck. We'll help you set up the workspaces. We'll help you get the right settings for the markets that you trade. And you may be really good at trading bonds, for example. Maybe some of you trade the 10-year notes. I trade occasionally the bonds, but I don't trade it often because I can only follow 1 or 2 markets at a time. So when I'm focused on like the ES, I may look at the 6E or crude oil, and that's about all I'm looking at. So I'll ignore the bonds unless there's a huge movement in bonds or crude is moving really poorly or the S&P is really flat. Maybe I'll go over to bond markets and see if I can find some potential trade opportunities. So we'll tune the settings. All the indicators have inputs that are adjustable, so that you can make them work for the market that you're in. Okay, so I hope that answers your question as far as using it on a different instrument. Next question, what stop do you recommend? Okay, so that's a good question. And the easiest way to answer that is, guys, when we put in, for example, on this 5-minute chart, we put in a low. It's important to look and keep that in perspective. Is this area here anywhere near a major resistance area? For example, like a daily support level, an hourly support level. So I will mark my charts. I don't have them marked up today because I didn't want to make my charts a cluttered mess for you guys. But many of you use trend lines. Many of you use support and resistance levels, pivots. There's actually a free indicator on NinjaTrader. It's called like floor trader pivots, I think, or pivots. I'm not sure. And those are good. Those are helpful. Those are helpful to use. They're there. Ninja put it included in the charting package for a reason. Use them. You know, we could sit here and make one and try to sell it to you guys, but there's no need. You know, we're not. That's not what we're trying to accomplish. We want you. We've been working on these for a long time, so we tried to focus on things that we thought were going to be really, really helpful. There are other things that are already in existence that are out there that work well as well that you can use you can complement with our indicators. And many of you probably already have your own set of indicators that you're very comfortable with that maybe give you dynamic support and resistance. So combine it with ours, and you can further confirm your trades or give you a little more confidence to take those entries. So to answer your question, I didn't mean to go off on a tangent there, but the easiest way that I would look at it in the most simplistic way is I start drawing areas where price cannot, as you can see, we tested, came back down, tested, came back, didn't quite test, but never were able to break through that, came back down, tested 1, 2, you know, all these candles came down, and finally when we got our long signal here, this was confirming, and this was confirming. Okay, let me see if you guys can't see that too well. So, okay, this is more helpful, I think. So as you can see, as this started confirming here and here, I would have placed a stop a few ticks below the low of this line. And why would I do that? Because I'm respecting market structure. I know I'm going to be wrong when I trade many times. I've had plenty of losing trades. I'm not going to sit here and tell you guys that I'm trading 95% success rate or anything like that. It's probably closer to 70. On a good day, maybe 80. But I would say 60s and 70s is more typical. But the thing is, I keep my stops to a very, very minimum. I mean, if I'm wrong, I'm going to be wrong right away. And if price breaks through both of these indicators here and breaks through my support area, well, guess what? I was wrong in the first place. Prices are not moving higher yet. Doesn't mean they won't break back and go higher, you know, take me out of my stop. But in this case, I'm not going to stress over it. I'm just going to put my stop a few ticks below. On the S&P, on the ES contract, I'll probably use anywhere from 4 ticks, maybe 3 ticks sometimes when there's a lot of momentum going in my favor. I'll tighten up that stop, but up to 1.5. So you do have to give the S&P some room to move. It is not. It doesn't move like the Russell index or the crude oil market. The S&P trades a lot of volume. It takes a lot of orders, a lot of trading to get it to go one way or the other. So that's why everybody pays attention to it, because when it does finally start going, it just takes off. And that means that a lot of people, a lot of large money is interested, it has interest in that contract at the moment. So definitely keep that in mind. And so my stop would be right there. I wouldn't risk more than, I would say max, maybe 2 points. Depends on your risk. Again, this comes down to your risk tolerance. Do you have a very large account? Then you can put a 2-3 point stop in there, and you will take less losers. But those times where price does pull back several points, will take you out for that loss. So you're just going to have to make sure that you're keeping your percentages, your risk to reward in order. If you're going to risk 3 points, you better hope that target is 3 points away, at least. Okay, and as many of you know, that's a lofty goal to expect that kind of move out of that. So, if you're going to take an entry there, let's see here. I wanted to show you guys possible targets on that trade. Bear with me 1 second. I just don't want to screw up my charts here. So if we look at the prior swing, it wasn't very much. It was a tight range, swing high to swing low. And we took that entry on this signal here. Our first target would probably be the 127 extension, which would be 1608, which was approximately 2.5 points away. Okay, so that's if you entered on one of these. What's that, 1607? That's 1.5 points away. Your second target would be almost 2 points. So those are just various areas. And then in this case, you would leave something on in case price does go in your favor. And I'll make sure I remove the right one. I don't want to screw up my charts again. Okay, so the reason, so I'd take half of my position off when I'm either 1-to-1 on my risk, and then at that point I'll leave a little bit on. If I'm trading 4 or 5 contracts, 10 contracts, I'll take half off and I'll leave 2 or 3 on for a runner, and I'll just scale out of my trade as price moves in my favor, and I'll drag my stop along with this Cobra line right here until price comes and takes me out, which would have been right about here. Okay, so in that case it was approximately that was 10.5 points away. Do I get 10.5 points every trade? Absolutely not. Please don't sit there and say, oh God, this guy's making 10 points a day. No. If I make 2 to 3 points a day, I'm very happy, very content. Most days you're not going to get this type of trend move. Okay, as most of you know, the S&P is notorious for chopping around like this and just frustrating the hell out of traders. And then occasionally you do get this move, which is the only reason why you leave a runner on. We don't know when these days are going to happen, guys. So the key is to take a little profit on your way if it's going in your favor, and then leave a little skin in the game just in case you do get this big runner, because then you can brag about your 10-point day. Well, I hope that example was helpful. Let's see here. Let's move forward. Right now, prices are kind of taking a break. Keep in mind right now it is 1:46, so most of the floor traders and stuff were out to lunch. They should be getting back anytime now and getting back to trading, so this activity should pick up a little bit. As you can see, this is very clear. I mean, we don't have a lot of stuff on the chart. We have a few indicators up here that are kind of over the, let me full screen this. These arrows, don't let these arrows confuse you and say, well, God, there's a buy signal, and now there's a sell signal, there's a buy signal, there's a sell. Ignore those. The reason we have these plotting so often is because they're very tight settings that are looking at price on each candle. And so if we already have our bias to the upside for the morning, I'm going to ignore every single red arrow down. The only reason I would look at these arrows is to tell me to go possibly look to exit a long trade, or to take profit, or to close my position completely. Okay? So once we've established the larger trend, we're going to stick with that direction. And we're going to use these entries, these signals here, to give us an area where we can enter a trade. Okay? So that's the best way for me to explain this, because a lot of times I'll get people, they see all these arrows, they're like, well, your indicators are showing a long and a short and a long, and I don't know what to do. Take a step back. You're not using this to jump in and out and scalp, for 3 ticks, 3 ticks, 3 ticks. You could, and you'll probably do, excuse me. All right. You'll probably, you could do that, sit there and try to go for 2 or 3 ticks. And personally, I don't like trading that way. It's very stressful for me. I like to be able to put my orders on, put my stops, not walk away, but be able to kind of just sit back and watch these trades either pan out or take me out. If I'm taking more than 3 losing trades in a row, 3, 4 losing trades in a row, then you know what? I got to step back. Maybe the market's just too choppy for me that day, based on the methodology that I'm using. Doesn't mean that the way I trade doesn't work. There's many ways to trade, as most of you know who have been in this game a long time, and that's why the market exists, because there's so many ways to look at indicators, there's so many ways to look at pricing. For us, looking for a long entry, for all we know, there's a hedge fund that's just trying to go short. So they're trying to hedge their stock positions, their equity positions, by shorting the S&P all day long. All they're doing is accumulating a large short position in the S&P contract to offset their longs in Apple, Google, and GE. So we have to keep that in mind, that there are larger forces at work, and so we don't want to try to fight with the market. We just want to let the market tell us what it's doing, let everything line up and confirm, and we just jump along for the ride. We're trying to catch a little bit of it, that's all. Let me see if there's any other questions. Will you be discussing the auto trader? I will be discussing the auto trader at some point. Right now, I don't have it on this computer to share with you guys, but I can set up a one-on-one with you if you would like to go over that and show you some of the settings we're using right now on those. The auto trader is, those of you that aren't familiar with it, it's something we just released, and it's basically this indicator package. That uses multi-time frame analysis. It automatically will scan the charts, and the nice thing about that is, like we were talking earlier, saying I can't follow more than a couple markets at a time. Most of you are probably the same way. You can probably look at 1 or 2 markets, maybe 3, but you start adding more markets onto your charts and on your screens, and at some point you're just missing on all these signals, because you can't follow. The human brain just cannot follow the multitask that well, unfortunately. It's a rare exception for people that can look at 10 different instruments at once. But the nice thing is the auto trader will do that for you. It will analyze those, and when the signals confirm and go short, the auto trader will take that short for you, put the entry in. So all you really have to do is manage the trade after that. And managing the trade is the easy part. Some people say the entry is the easy part. For me, entries are a little tricky. I think it's easier to manage a trade once you're in it, because now you're in it, and now it's just a matter of letting it work out, sitting on your hands and doing that. So I'm sorry, I apologize, Kim, I don't have the auto trader here to show you guys, but if you have any specific questions about it, I'm happy to answer that. And then I can definitely meet with you guys, make an appointment or session to get on Skype with you and possibly talk about the settings and show you some chart examples. I don't have any today though for this presentation. All right, so let's move on to the crude oil market. I think we're on the August contract. I think I'm going to change the way these charts are lined up, guys. I'm going to move these so you can see these indicators a little better. Unfortunately, I'm going to lose my time in sales window. Well, maybe not. Let me see. Okay, here we go. We can make this work. So there was a couple questions about the auto trader, and definitely the auto trader is a very neat tool. But to be honest, I think you guys, if you guys take this all in, this is most important, because if you understand how the platform works, how the indicators work, then the auto trader is just going to be another tool for you guys to be able to implement this successfully. But this isn't, definitely learn how these indicators work so you understand why the auto trader will do what it does. Otherwise, if you're just, it's not like a lot of auto systems that are just, they don't explain they don't go into detail on how it works. They just, because everything's locked in code, and they don't tell you what that code is because they don't want you to, go pirate it. We're very upfront about that, with the respect that our auto trader there's nothing magical about it. It's simply they took our indicators the way we have them coded with specific settings and ported it over to take off some of the manual load off of you. And so a lot of traders have been asking for that for a while. A lot of our clients that have been trading Forex for a very long time with us, they're like, hey, look, we want to trade, more efficiently. We want to trade more markets, but we can't. Can you get something developed that would take the signals and analyze a higher time frame and all these requests? So we tried to put some of those in, and it's constantly being worked on. We'll probably have another release or improvement to the auto trader in a couple months or so, and we're just going to keep adding features to it as we have them come in, feedback, and as we get feedback from you, we'll be adding those features to the auto trader if it's something that enough people are interested in, and we think it'll actually help the overall results of the system. As it stands right now, the system is very good at taking the entries. It really comes down to how you set your stops and your profit targets on the ATM through NinjaTrader. So that's really where the tricky part is. And so if you set your chart settings, your stops and targets correctly, you can take ticks and pips out of the market all day long. It's pretty neat how it works. So, all right, we are on the crude market. As we can see, crude has been trending higher, right? Higher highs, higher lows. There was a couple signals here on the larger time frames. 30-minute chart here has also been a nice little uptrend. And then let me switch this over to a 15-minute just to see how it did earlier today. This was at 6 in the morning here. Here's a perfect example of where you wouldn't have just jumped in on the signal. Yes, price is above our Cobra lines. Yes, we have a buy arrow, right? I think let me change this to crosshair. Actually, let me go with the spotlight. Okay, so the arrow triggered, I think it's this candle right there if I'm not mistaken. Our MACD definitely confirmed long. However, momentum was rolling over between those two candles. So this is one of the reasons why I like utilizing a pullback method rather than jumping in on the signal. There are times I'm going to miss a trade, guys. There are times where price is just going to keep moving higher without me, and I had my limit order down here waiting for that pullback that never came. Okay, but I'm okay with that. I don't mind missing 3, 4, 5 trades. When it does pull back and takes me in, I just feel more comfortable. I know my stop's closer. I'm risking less money, and if it doesn't work out, I lost less money. Whereas if I get in here and it doesn't work out, I lost more money. So that's the easiest way to explain it. That's why I like these pullbacks to the Cobra. As you can see, price does a nice job, comes back, tests the Cobra. It tests our larger setting Cobra here, did not break it. So my entry order would have been anywhere in here. Now here, this started turning red. Our Cobra started turning red because selling did start coming in. However, our MACD stayed long, never wavered, and our price, we only had one red candle. That's not enough for me to give up on a possible long entry. Now, had price had this next candle here closed red and closed below this white line, then I would have reconsidered this whole long. Maybe I'm wrong. Maybe the market's going to chop for the next 15, 20 minutes, 30 minutes. So that's on a 15-minute. Now, I probably wouldn't scalp on a 15-minute for crude, but I like to know what the 15-minute's doing. So if I go down to the 5-minute, that same place, let's go back here. I believe it was somewhere around here. This was that whole area here, these candles here. Prices all stayed above the Cobra, and our faster Cobra, I should say, is the first one to kind of turn, but then it reversed back. So your entry would have been anywhere in here with your stop below. Everything was still intact for this long. We already had our bias for the day, right? We already had our hourly and our 30-minute. So It's not always going to be picture perfect. It's not always going to stay green all the way up. That's just not the reality of indicators. I don't know indicators that work that way. If they're too smooth, a lot of times you're missing the price action because it's telling you to stay long when in reality prices could be breaking down. And this was very clear about that. It was letting you know, hey, these buyers, whoever was there buying, is gone. We are now getting some selling coming in. Doesn't take a genius to see that. So this just kind of gave you a visual cue of that to say, wait, I'm going to hold off getting in that long. As we can see here, our MACD flipped for a brief period, a couple candles on the 5-minute. And then I moved down to my 1-minute or 3-minute chart. Oops, let's see if we can get that. Where are we? Okay, so it's somewhere around here. At this part right here. Okay, so as you can see, you had to sit through this consolidation. But now how far was that? Let's see. Let's say you got in anywhere. Let's do this so you guys can all see the same thing. It's easier, right? Okay. Oops. Sorry about that, guys. Let's try that again. Okay. Let's go from here to here just so we get an idea of how the range was there. It's about 27 cents. And then below that, we're looking at approximately a 10 to 15 cent stop on crude. This line was at 24, actually, the lower Cobra, and this is at 35. So that's about a 12-cent move, a 12-cent stop that you would have had to risk if you got your entry anywhere in here through this consolidation. So price never came back and took you out. The 1-minute definitely looked a little scary here because it was going up and then down, and this turned black and went back to white and then black. So this is kind of that price action that we all hate to see. And crude is usually really good, but today for some reason it ranged out at 97.70s and then finally decided it wanted to go a little bit higher, and that was it. Didn't do much. So crude wasn't a very pretty contract to trade today, and that's going to happen. There's going to be some days that some of them just aren't moving very well. Okay, so that being said, let's see. Question, in that case, can you confirm with the 60-minute or daily chart? Absolutely. Absolutely. Now, daily, I wouldn't focus on so much. Let's take a look at the daily chart on crude. Here you go. It has been or just started going in an uptrend, but everything is still pretty early on the daily. Like the momentum was declining here. Even though it was selling off, it went from 99 down to 90. Looks like we hit a low of 93s. And we just reversed on that. So crude is very whippy. It has these powerful moves in either direction, and it can really just take the wind out of your sails if you're caught the wrong way. So the way to utilize this is we see the long bias. It ended up working out. Prices did move higher, but you really had to fight with the instrument today. Like crude wasn't giving up its profits easily. And so the real key here is once you have your bias there, let's move down to our 60-minute. We said, okay, we're going to look for longs, but guess what? We're going to use what? When you have pricing like that on the daily, you're probably going to have smaller targets because you just don't know how much you're going to get out of those moves or those swings, okay? That's the smartest way to trade that. So here's the 60-minute again. We're kind of in the middle of the ocean here in range, even though, as you can see, our channel's been moving higher. This tells us what? This is an uptrend, right? Our ocean indicator is pointing up slightly at an angle. It's not a very steep angle, but look at the 30-minute, much more steep. Okay, also confirmed by momentum. Let me change this here because that's impossible to read. see if that helps. Okay. So as you can see, our market force indicator was increasing. And our MACD down here was also increasing. So your 30-minute was also telling you to look for long. And then you'd come over here to your 5-minute at approximately, well, pretty much any time of day, to be honest. It was looking for a long setup, but there was that pullback here at approximately 12:30. So just keep that in mind if you're going to trade on days like this where price is ranging out. There was opportunity in the morning, and I definitely recommend an instrument like crude, trading it early in the morning. Be done with it. Take your ticks out of it. Don't sit there and hold it too long. Okay. So I don't like to trade in the afternoons, especially markets like crude. But the S&P, the Nasdaq, the Dow, you can get away with trading those a little more later in the day, so to speak. And sometimes you'll get a run in the close that will give you some nice payoff. But a lot of people trade in the mornings and they give it all back in the afternoons. It's very common. It's a very common occurrence. So you just have to be aware of how the market's moving. So crude, not the best market to trade today. However, there was some opportunity to make some ticks. And here was another possible trade at 7:30 this morning. If you didn't catch that first swing, you could have re-entered on this swing here. And then we had a pullback to the Cobra line. And then price continued moving higher up into 98.20s. Hope that answered your question, Canoe. Any other questions, guys? Because we've gone an hour. It's longer than I intended to, but you guys had a lot of questions today, so just wanted to go over all this with you. You're welcome. I hope it was helpful. If you guys don't have any other questions, those of you that want more information on the alpha system, just Kim, you mentioned you wanted to find out more about it. Just send us an email at info@CatchTheTurn. I'll type it in the room, and we'll set something up we'll do a Skype session with you, and I can go over some charts with you. I apologize, I don't have any charts to show you on this computer, but we can do it from another computer. So, you guys have any other questions? No? Okay, well, there's another webinar tomorrow. It's going to be a market recap again. We'll look over what moves the market gave us in the early morning and answer any other questions you might have. You're welcome. Okay, guys, I'm going to let you go. Thanks again for coming and spending some time with us. And, oh, Joe, okay. Let's take care of the free indicator. Joe, did you attend the NinjaTrader webinar? Okay, so all you have to do is you send an email. Huh. All right, I will take a look and go ahead and type your email to me in the chat and send it to me, and I will make sure you get that right now. Okay. Check your box in the next 10 minutes, and I'll take care of you, okay? Thank you for coming, and I'll see you guys tomorrow. Have a good one. Good trading.